Okay, I want to thank everybody for coming out today. Gorilla Prince Consulting is starting a financial literacy series thanks to the partnership we have with Mr. Juan Pedroso. Mr. Juan Pedroso is the founder of the MoneyMan Business Solutions, LLC. He's an experienced tax and accounting professional with over 17 years in the financial service industry. As an IRS enrolled agent, a QuickBooks Pro advisor, and a Ramsey certified financial coach, Juan combines technical expertise with the passion for helping individuals and businesses achieve financial clarity and confidence. Through the MoneyMan Business Solutions, he provides comprehensive tax preparation, accounting, and financial coaching services designed to empower clients to make informed financial decisions, reduce their tax burdens, and build lasting wealth. And I know all of this because Gorilla Prince Consulting is a client of the MoneyMan Business Solutions. And everything that Juan is doing for us, we wanted to be able to bring to the community, to help support not only, our financial goals, but to give this information out so that you can start to build wealth in your household and in your family. So without further ado, I am proud to present Mr. Juan Pedroso and his financial literacy, learning how to prepare for your first job speaker series. This is part one. And so we have many more to come. And so we're excited to start this off with this situation. Juan, are you ready?
Yes, thank you, Kimberly. Thank you for having me. Thank you for everybody that has joined tonight. Hope that you guys take a lot out of what we're going to talk about tonight. It's going to be short, but it's going to be straight to the point, right? Because we definitely want everybody to obtain the information. And just to be clear, Kimberly, you're going to upload in at your.
Can y'all see the slides?
Yes.
Okay, yeah. So just let me know when to advance the slides.
So you can move on to the next one. Go ahead. So we're going to talk about different topics today, okay? All in preparation to your first job, right? Because when you get your first job, uh, you've gone through the interview process of the company. You know a little bit about the company. You know a little bit about the role that you're going to be doing, right, in that company. At this point, you do know what you're going to get paid, hourly or salary, right, in your company. So you do know all that. You know your start date. You know when you're going to start and what your hours are going to be every week and what your schedule is like on a weekly basis, right? So you understand that by the time you get to your job. Now, when you start that first day in orientation, right, there's different areas that you need to be able to know and do correctly the first time. Because a lot of these things that we're going to talk about are done at the beginning, but are really not things that are brought up after that. Like these are things that you all have to do when you get onto your orientation, do on the first day or the first couple of days. But once they're done, normally nobody brings it up again. So whether you do it correctly or not, nobody's really going to point that out or highlight that out. Unfortunately, a lot of times what ends up happening, especially with withholding, and we're going to talk a little bit about that a little bit later, by the time you realize if you made a mistake or not, you're preparing your taxes and it's too late. Either a lot of people, either you under withheld and you have to pay back, and you ask your tax preparer what happened, why. Then your tax preparer ends up saying, well, you're under withheld. So you got to go back to your job and fill out the forms. Or if you get a refund, right, you over withheld. This happens a lot. And unfortunately, you end up finding out these things when the process has been done. and you've done your taxes, and at that point, it's already too late. The year has passed. Then you have to go back and start asking questions and finding out what happened. And it turns out that when you did these things at the beginning, they may have been done incorrectly. And unfortunately, throughout the process after that, nobody brought it up ever again. So, in this webinar, we're going to make sure that on that day when you first start your job, you understand what is going to be expected of you in terms of documentation and filling out paperwork, and to do it in a correct way to make sure that going forward everything was done correctly so you don't have to go back with fixing things and things like fixing paperwork. And if you ever do need to make changes, um, you know how to do that. You know who to talk to. You know who you need to reach out to maybe fix any potential mistakes or any changes that you need to make. And again, these are all things that we're going to talk about in the webinar. Just giving you a brief summary of what this is about. These are things that you're going to go through when you start your first job in orientation. You are going to interact with all these things that we're going to talk about today, and we want you to be ready for it. The company will explain to you. They'll do their best to explain to you what needs to be completed, but at the end of the day, it is your responsibility to make sure everything is correct and what then the information that you're giving to the company aligns with what your expectations are with what is going to happen with your pay, with your taxes, et cetera, et cetera. Okay, so you can go to the next slide. All right, so there's a couple forms you have to fill out when you first come in. Okay, summer tax forms. We're going to see summer immigration forms. Okay, these are all standard forms that everybody completes or has to complete. Okay, first one is a W 4. Now, what is a W 4? So, a W 4 is an employee withholding certificate. So, it's a federal form, it's an IRS tax form. An employee completes and submit to their employer to indicate their tax situation. And this is what the employer is going to use to calculate what is the proper. And again, what I mean by proper is depending on what the form says. Based on what the form says, then that's what they're going to use to determine what should be the proper amount you should be taxed or withhold amount of taxes that should be withheld from your paycheck. Okay. Again, I reiterate, the employer will go based off what you write on these forms. So it is your responsibility to make sure you are writing the correct information based on what expectations you want. So then the employer will take that info and then calculate the proper withholding amounts accordingly to what they receive on the form. So the W-4 is the first one, and then you go to the next slide to show you an example of what a W-4 looks like. Okay, a lot of basic things. At the top goes your information, your name, social security number, your address. Okay, now guys, it is very important that you put the correct address. Or if you're going to change your address, remember to change it. Again, everything that your employer does for you in terms of taxes, in terms of pay stubs, in terms of W-2s, okay, it is based on the information that you give to them on these forms that we're going to go over. So if you move and you don't notify your employer will not come up to you and say, hey, I'm about to send out the W-2s for you. Did you move? They're not going to do that. They're just going to go off what you wrote on this form. And if you're at 123, 11th Street, New York, 10040, that is where they're going to mail the W-2 if they don't have the electronic option to do so. Okay, so it is very important. Your name, your social, your date of birth. Your address. Now, the second box, you have filing status. It is very important that you try to match these forms as closely as possible to how you're going to file your taxes. So if you're single, you mark single. If you plan on filing head of household, and head of household means that you have dependents that you're allowed to do head of household, do head of household. If you're married, as you can see in the form, there's two types of married. It's married filing together, or married filing separate. Okay, depending on which one you select, will impact your taxes at the end of the year, will impact your withholding every pay period. So try to match that as closely as possible to what you plan on doing when you file your taxes at the end of the year. And again, same thing as what I mentioned in the address. If that situation changes throughout the year, do not expect your employer to automatically read your mind. You have to let them know that you got married. You have to let them know that you got divorced and now you're single, et cetera, et cetera. Okay, it is always your responsibility because the employer will only go on what's in that form that you give them. That's it. And the only way they're going to know any changes is if you know that you have to change this form. Okay. So at the top we have the info, we have the tax status. We continue down to step 3. Okay, this talks about if you have dependents. This is an important one, guys, because if you put 0 dependents and if you put that you have dependents, that will change the withholding dramatically. Okay, so if you say you have no dependents, the system will assume that you have no dependents and that you will get taxed at the highest rate. Vice versa, if you have dependents, then the withholding will be more lenient because you have dependents, and then tax system is set up that when you have dependents, you get taxed less because you need more money coming to you to take care of your dependents. So this part is very important, guys. If you have a dependent is somebody that is dependent of you. That's why it's called dependent, because they depend of you. That is what determines if it's a dependent or not. They depend of you. So if you have 2 people that depend of you, you put down 2. You have nobody that depends on you, you put 0. Very important because this will make an impact on your withholding throughout the year. And if what you put on your taxes when you file your taxes does not match what you put on this form, you will have either a positive or a potential negative impact on your taxes. Okay, maybe you put single 0 dependents and you have a dependent at the end of the year. Okay, you over withheld. You get a refund. But if it's the other way around, you're not going to be too happy. So, very important that you try to fill out this form as accurate as how you're going to file your taxes. Okay, and then at the bottom you sign and date, acknowledging that the information that you put is correct to your knowledge, and you hand it over to your employer. And this is what they're going to use to properly withhold the federal withholding. Now let's go to the next slide.
Wait, before we go, I have a question about, since some of our participants may be younger, school age, is there a space on here where they are not subject to have tax withheld, something called exempt? Is that on this form that they would fill that out, or is there another form where they can say, hey, I'm under 18 or whatever, and I should be, and I'm in school, can I be exempt from tax withholdings?
Yes, it is on this form. Yes, you can. There is an option for it. Yes, that is correct. Yes, yes. I'm glad you brought that up. Yes, it is. That would be, I believe, probably be on the second page of this one. Only put the first page here, but yes, yes, there is an option for you to put exempt. Yes, but that is again under circumstance that you just mentioned, right? It has to match what you're going to file on your taxes at the end of the year, as close as possible. Because if you put exempt, yeah, you won't get taxed. Congratulations throughout the year, but then you go do your taxes, and it turns out that that was wrong. You're going to be in for a rude awakening when you have to pay back a whole bunch of money. But yes, the option is there. Great question. All right, next slide. Okay. Now, I-9. So this is for immigration status, right? I mean, I know everybody's seen on the news how immigration is clamping down on illegal immigration. So when you're going to get a job, it is the employer's responsibility to make sure that you have the proper documentation to be able to work in the United States. And they get that through the I-9, which is an immigration form that verifies if you are truly eligible to work in the United States. So, and the employer has 3 business days to collect the proper documentation to in order for them to have proof that you are eligible to work in the United States. So, if we go to the next slide, I'm going to show you an example of that. Okay, now this one is a little bit different than the federal form because the federal form you just have to complete it. This one you have to complete it and also give documentation because it's not just saying, okay, yes, I can work and that's it. You have to actually have proper documentation approved by the United States Immigration Services that you can work. So here we have um, your name, social security number, and then what is your immigration status, right? We have different statuses. U.S. citizen, either you were born in the U.S. or you became a naturalized citizen, right? That's one. The other one is you are a permanent resident, right? What people call the green card. You have a green card, okay? And then we also have workers permit, right? What they call an employment authorization card, right? Which is a different type of card. It doesn't give you all the immigration benefits like a U.S. citizen or a permanent resident, but you are allowed to work with that card along with your social security card. Okay. So, what are the requirements for ease immigration status? Documentation. I should have sent you that, but it's okay. I'll just verbally say it. If you're a U.S. citizen, you just have to show your U.S. passport. That's it. Either your passport or if you were born in the United States, your birth certificate. That's it. The only documentation you need to provide to show that you're a U.S. citizen. If you are a permanent resident, you're required to show your green card plus another form of documentation, which would be in the form of your social security card. Okay, so there's an additional document that is required if you are a permanent resident. So it's your permanent resident plus your social security card. Okay, and just to be clear, these are actual physical documents you need to submit to your employer. You cannot bring them a copy. You have to bring them the actual document. They're allowed to, make copies and keep it for their records. They don't have to keep your original stuff, but the original documents have to be brought in by you. And the third one, which you said the worker authorization card, as long as it's valid, because remember, green cards and worker authorization cards do expire. You do have an expiration date. So you have to make sure that these things are not expired. If they're expired, we have a problem. But if they're not expired, you bring that in along with a social security card that says you're permitted to work and you can go ahead and work. And then you fill out this form at the top. The employer will fill out the rest, confirming everybody signing, saying that yes, we've confirmed, verified this person can work. Is legally allowed to work in the United States. Okay, so this is the second form that you will be required to fill out and will be required to bring in that proper documentation to prove that you can work in the United States. You can go to the next slide. All right. So the first 2 forms were federal forms. So those are general forms that anywhere in the country, those forms have to be completed. Now we're going to go to a state-specific form. In this case, since we're doing the webinar in New York, we're going to stick to New York. So this is the form IT 2104, which is the employees withholding allowance certificate, but for the state of New York, New York City, and Yonkers residents. So it's similar to the W-4 with the difference that this is a state-specific form. And it's for people that are residents of the state. And in the next slide, we're going to show an example of what it looks like. Okay. Now, want to clarify about this certificate. I want to emphasize that these are for people that reside in New York State, not necessarily work in New York State. You can work in New York, you can work in New York City, but if you reside in a different state, the employer has to give you the state specific form. Right now, we're keeping it simple because we're doing everything in New York. So we're doing New York. But just want to clarify that the way you get taxed is where you reside, not necessarily where you work. There are situations where you do get double taxed and things like that. That's a different story for a different day. But for now, to keep it simple, this form is for residents of New York State, where you live, not necessarily where you work. So here, same thing. You're going to put your name, your address, your social, and then it's going to ask you a list of questions. Because depending on how you answer these questions, will determine how you get taxed. It's going to ask, are you a resident of New York State? Okay. Now, if you look at the top part, right under the bar, right under where you put your address, it asks two particular questions. These are very important questions. It says, the first one, are you a resident of New York City? And then it details what boroughs are considered part of New York City. So you won't have any confusion. Okay? New York City consists of, and if it says it in parentheses, the 5 boroughs: Bronx, Brooklyn, Manhattan, Queens, and Staten Island. If you are a resident of one of those boroughs, then you mark yes. Next question it asks, are you a resident of Yonkers? The reason New York State asks these questions so specifically is because if you are a resident of one of these areas, you are required to pay local tax as well, on top of New York State tax. So if you are a resident of one of these places, your employer should withhold local taxes as well. And again, if you reside in these places, not if you work. You can work in New York City and live in Rockland and live in upstate New York, and you will not get taxed at the New York City level if you don't live in New York City. Same thing with Yonkers. Okay, you can work in those places, but what matters is if you live in those places. So if you do yes or no, you mark yes or no, and then your employer will know if they should worry about withholding local tax from your check as well. Same thing at the bottom as the other ones as we talked about with the W-4. Is it single? Are you married? Are you head of household? Do you have dependents? Same situation. It is up to you to provide accurate information to your employer, and based on what you give them, is what they're going to do to give to their payroll department to then properly start withholding the right amount of taxes based on the information that you told them. If anything changes, it's your responsibility to grab one of these forms and make whatever changes is needed, give it to your employer so it can reflect on your future paychecks. And then at the middle, you sign saying that you're being honest, you're not lying about anything, and then give it to your employer, and then your employer will take care of the rest for your pay. So these are three main forms. Okay, very standard forms that all employers will ask you to complete when you start your job on the first day when you're getting hired. Okay, important that you properly fill this out so you can get properly taxed. Hopefully, you get properly taxed. Now we're going to go to the topic that's more interesting for workers, right? How are we going to get paid, right? Different methods, there's different payment methods, okay? Not all employers offer all 4 that you're reading there. Some offer 2, some offer 3, some offer all 4. It really depends. But it is very important that you know these options. So when you go to your job, you ask, what are the different types of options, right? So the first one is direct deposit. In order, which has become very, very popular, very quick and easy for everybody, for the company and for you to get paid. You are required to have a bank account in order for a direct deposit. We'll talk about uh, bank accounts a little bit later on. but you are required to have a bank account for direct deposit. If you don't have a bank account, then you have paper check as an option. Okay? Well, and paper check is on payday. Somebody at your company. We'll talk about different lines of contact later on as well, so you can know who you should go bother on payday. Right? Um, is going to have a check in their hand with an envelope for you to go and cash. Should be at a bank, but if you don't have a bank account, okay, the check cashing place or wherever. But that person will be responsible to have that check in your hand and give it to you so you can go and cash it and get your money. Another option that a company offers is payroll cards. So payroll cards is like a prepaid card given by the company where the company will direct deposit to that card. So it's a similar form of direct deposit, only that instead of a bank account, it will go to a card. You can take that card and go to an ATM and take your money out. Very important that if you're going to take the payroll card, find out what ATMs are free. Because a lot of these cards do have it's called networks of ATMs where you can go withdraw your cash for free without getting charged ATM fees for taking out the money. So ask what the list of networks are. They will gladly tell you who it is, so you won't get charged for taking money out of the ATM. And then the last one, this option has highly decreased over the years, but it does still exist. Some employers still pay cash, which cash money, right? So they just give you the cash um, on the spot. They will give you normally a pay stub, and we're going to show you what a pay stub looks like later on. That has all the deductions, and that will tell you how they got to that amount of cash that they're giving you after all the taxes are taken out. So these are the four ways to get paid, four different payment methods of how the company um, pays you. Slide. Okay, so who are your lines of contact? Right. I mean, depending on the company you're working for, some company has hundreds of managers and directors and vice presidents and CEOs and all that. And some companies just have, one or two managers, right? It really depends on the size of the company. But in your situation, you're normally going to have three big, main, important lines of contact. You got your manager, right, which is the one in charge of your department. That, I guess, is the head of the department, let's say, right? Depending on the size of the company, they have an assistant manager that helps them out, either when they're not there or when they're doing something else, right? Because again, depending on the size of the company, if it's a big company, your manager won't always be readily available because they're going to have a lot of things to do. So the assistant manager will be the one that is normally more available for your needs or if you have any questions or if you need anything in particular. So it's normally the assistant managers that you normally go to first. They'll be more readily available, but you also have the manager in case the assistant manager's not there, or if you just it's something that needs to go to the manager. Okay, and these are the type of people that you're going to know who they are for if you need to call out or if you need to ask for a particular form maybe that needs to be filled out, right? Or like the forms that we talked about before, maybe you need to make changes. Those are the people you need to ask. Okay, how do I get that form so I can because I got to make changes or whatever this case may be. Those are the people that give you your schedule. Those are the people that are going to tell you how many hours you have to work. Those are the people that are actually going to submit your hours to payroll for you to get paid. Okay. And then the third line, an important line of contact is human resources, the human resources department, right? Those are the people that you normally met with when you interviewed, right? They're the ones that determine you getting hired. They're the ones that give the information for the most part to the payroll department. They work directly with the payroll department on you getting paid, on your different payment plans, on any company benefits that they may offer, right? If you want to know anything about what benefits the company offers, human resources will be the person that can easily tell you that. Also, If you have any questions about a particular rule, about a particular labor law that you're unsure of, if one of your managers, for whatever reasons, is maybe violating, or maybe you're being treated in a way where you feel that may not be the right way, human resources is that person that you can go to in confidence to express your feelings, to ask questions about certain laws and rules or requirements and policies that the company has that you want to be aware of. Okay? So these are the three main lines of contact. These are the people that you should know and have access to and know who they are, for your needs while you're working at the company. Okay, next slide. Now here's a preview of a pay stub. This is what a normal pay stub looks like. Okay. See, now this is pretty much a summary of what you gave them on the first couple forms. Remember the W-4, the IT 2104, right? That info all comes here into the pay stub, right? So at the top, as you can see, we have employee name and address, right? They got that from where? They got that from the W-4 that you filled out, right? They got that from there. You got your social. They got your social from there as well, right? So then you got the pay period. If you're weekly or if you're biweekly, it's going to take from what it's going to tell you from what date to what date that you worked is that you're getting paid on this period. Okay. Then we have here the amount of hours that you worked and what is your total gross earnings. Now, gross earnings is the amount that you earned from the time that you worked. That's not necessarily the amount you're going to receive. That's just the starting point. So in this situation, you work 40 hours. Here they calculated it at $20 an hour. Your starting point is $800 that you earn. And then from there, if you look to the right, now we have the deductions, Medicare, Social Security, which are all standard deductions for employees. Now we have the remaining deductions are federal and state income tax. Again, from the info that they received from the form that you gave them, the W-4, the IT 2104, the information that they took from there is it's what they're using to calculate the federal income tax and the state income tax. Now, in this example, the person that lived that working is working here does not live in New York City or Yonkers, because if they did, then there would be a fifth line where we would have local income tax if they resided in either New York City or Yonkers. But in this situation, apparently the person does not reside in New York City or Yonkers, so there's no deduction there. There's no requirement for withholding there. But if there were, you would see a fifth line that would say local income tax. And then that $800 gross subtracted from all those deductions that you see here at the bottom right, the last number where you see net pay, $659.59, that is the amount that you're going to receive either through direct deposit, either through a check, either through a payroll card, or cash. And the pay stub gives you the summary based on the information you gave to them in that W-4, in that IT 2104. Now, and then put a tip here at the bottom, very important. Felt the need to say it. Oh, sorry, it froze on me. Sorry about that. Automate your savings to ensure to set aside money each month. Okay, you have the option. A lot of companies give you the option where you can automatically take money out and put it in a retirement or put it in savings. Automate it. It's very important that you automate it because, as you can see, these deductions are all automated. So you see it on a piece of paper, you don't really feel it. Okay, as opposed to when you get money in your hands and now you have to take that money and dish it out, it's a lot harder to do, right? But when it's automated, we don't even think about it. So just something to have in mind when you thinking about deductions and things like that. You can go to the next slide, please. All right. So now What are the different bank account options, right? So there's different types of bank account options. Okay. Now, there's the common ones, which are the free checking. A lot of banks offer free checking with direct deposit. Remember that was the first one on the previous couple slides back that we talked about different types of payment options, payment methods. Direct deposit was the first one. That's why it's become very popular because banks, more and more banks are offering free checking for direct deposit accounts. Okay. Some have interest and some even offer rewards. Now, those are the most common that you can just go walk in a branch and say, hey, I want to open up a checking account. They're going to ask you, are you getting direct deposit? It's one of the first things they're going to ask you because if you say yes, I want to sign up for a direct deposit. Okay, well now that gives you eligible for it to be free. Okay. Now, the second type of checking account is for special groups. All right. What are special groups? Some credit unions only give accounts to people that work at the government, for example. So if your mom or dad works at the government, they probably have an account at a special credit union. It could be municipal credit union, federal loan and savings credit unions, plenty of credit unions. But credit unions normally are given to specific members. Okay, if you have parents that are in the military, right? There's USAA, right? Those are only specifically for the military, and so forth and so forth. So there are certain accounts that are open to only certain groups, certain type of workers. And if your parents are meet into that criteria, you can probably open up your own account with that bank and get it for free as a benefit for being a family member of that member. So that's what we mean by special groups. Okay. So if you know that your parents are work for the government, military, things like that, go ahead and ask them, what who you bank with. They're probably going to tell you it's one of those credit unions that only accept their industry, and you could take advantage of, and get free checking and all that good stuff just for being a family member of a member. And then you also have the low cost online only checking accounts, right? The only online only bank where there's no physical space, there's no branch you go to, everything is done online. You go to their website, you open the account online, they mail you a debit card, and they tell you, okay, we have free ATMs at 10,000 locations, and they give you a list of all those locations. Similar to the prepaid cards that we talked about, the prepaid payroll card option that we talked about earlier. It's similar to that, where you get a card and they tell you what ATM you can go, so you won't get charged for taking the money out of the ATM. But there's no branch, there's no physical location. They do have a customer service number you can call, but everything is online. Everything's on the website or over the phone. So that's why we call it low cost, low touch, because since they don't have to pay rent for a branch, they are more in line to offer you more free stuff because they don't have to spend how much in rent and things like that, or hire employees for you to sign up for different products at the branch. So since they don't have those extra expenses, they can pass those savings on to you as the customer. Okay, so those are different types of checking account options that you have, which goes back into how you can get paid. Okay, and then lastly, to conclude, set your financial goals. Okay, once you know how much you're going to get paid, if you can briefly go back to the pay stub slide, you can see something here. If we look at the pay stub, once you see that first pay stub, you're going to get an idea of how much you're going to get paid. Because unless there's crazy hours of overtime or anything like that, or your situation changes, normally what you see on your first pay stub is normally what you're going to see on your check if there are no changes. So now we can go back to the last slide. So now that when you get that first paycheck and you know how much you're going to get paid, One more slide behind. Okay, next one. All right. Once you know you're going to get paid, now it's easier for you to plan. You know what to expect. You know how much is going to be deducted. You know how much your net pay is going to be. So now you can get into your goal setting, right? Now you know how much you can count on to make moves, to do things, to plan. Okay? So when you know what you're gonna get paid, now you can go ahead and set goals. Okay? And then we highlighted here smart, so you can look at these five key factors when you're setting financial goal. All right, the first one is specific. What are you trying to achieve? I want to save $100 this month. Okay, right? Specific. How much you want to save? Okay, great. How much you want to save? Right? Because I want to save money. Too general. I want to save $100. Now we're talking. Measurable. When do you want to achieve it? 2 weeks, a month, 1 week, a year. Hopefully, you don't want to just save $100 in a year, especially these days. But the point is when. How long do you want to take to get to that, to potentially get to that goal? Next one is attainable. Is the goal realistic? If you're making $400 a week and you say, well, I want to save $1 million by the end of the year. Eh, it's good that that's good that you're aspiring high. Don't get me wrong. Definitely don't want to bring you down from there. That's fine. But how realistic is it? How attainable is it? Right? I mean, because you definitely want to reach a goal, or, put a goal that you have a good shot at reaching in that time period. You definitely want to put a specific goal that is measurable in a decent time and that it's attainable, right? Because you're going to be very excited when you get there. In that example, like I said, if you're saying, okay, I make $400 a week, I want to save $1 million a year my first year, mm, right? And say, okay, is it attainable? And then the fourth one, is it relevant? Relevant. How is this going to help you? You're going to save the money to do what? Just keep it under the mattress? I mean, if that's all you want to do, that's fine. Nothing wrong with that. But what is it that, what do you want to do it for? Right? Do I want to buy new sneakers? Do I want to go to a concert? Or do I simply just want to, I just want to see that I have money? That is a reason. That is a relevant reason. There's nothing wrong with that. I just want to see that my bank account keeps growing. That's a reason. But you got to have a reason. There has to be a reason why you are doing all. And then the last one, which is timely, when you think you'll achieve the goal. Again, going back to a month or after a month, and you see that you've only saved, you want to save $200 in a month, and then you see that 3 weeks have gone by and you've only saved 50, you're like, okay, will I really be able to save this other 150 in the next week? Or am I going to need 2 weeks to really get to 200? Right? All going back to realistically, but definitely set a goal. You got to have goals because you got to have somewhere to aim, somewhere to go move towards. Okay. And you're going to have that if you set a target. And once you know how much you will get paid, you know how much you will be able to count on, you will be able to have that target. Um, this was the last slide.
Yep,
Uh,
this is the last slide. So let me put up contact
yeah,
information.
if you have any questions, these are my methods of reaching me. You can email, you can call me. I got the social media going on, Facebook, the LinkedIn, the Instagram. Definitely, feel free to follow us. We are providing tax tips, videos of tax tips and changes that come around to keep people updated. So
Well, I want to say thank you so very much for this very informative webinar. I know I learned a lot. I thought that I knew a lot, but I learned a lot after listening to you today. I do have a question though, because sometimes when I am processing these young people's pay for their W-4s and their I-9s. A lot of the times we find that children or the teenagers are entering their parents' information on their W-4s or their I-9s or their IT-2104s. How important is it for the person who's working to put their information on those tax documents and not say their parents' information, even if they're like 14 or 15 or 16 years old?
It is very important that they put the correct information, because this is all information that gets reported to the IRS and the state agencies. So if I turn around and put my parents' information, then the IRS and the state are going to be put under the impression that my parents are making this money. So then they're fall the responsibility of filing those taxes on their taxes. And if God forbid they don't put those forms on their taxes, then later on they're going to be, submit to under reporting penalties and all those other problems. And for a company perspective, it is also dangerous because if the company ever gets audited and their payroll records are asked for, and they ask, well, who's such and such? And it turns out that such and such is not working here. Well, what's going on? What happened there? So for both sides, there are some negative implications if this type of information is incorrectly inputted.
Well, thank you so much for that. Because I do realize that a lot of the times that's something that can happen. So I want to thank you for your time. I want to be mindful of everybody else's time. And can we do this again? I really want to be able to continue this conversation that we're having around financial literacy, around just being mindful of what it is that we need to look forward to when we are going out into the working world.
Yeah, definitely. No, definitely. Anytime. No,
Fantastic. Well, thank you once again for joining us. My name is Kimberly Downer. I am with Gorilla Prince Consulting. That is Mr. Juan Pedroso from the MoneyMan Business Solutions. And we wish you, happy life.
all right. Thank you for having me. Have a good night.
Okay, bye bye.